Hey, folks. Good morning to all. Um, let's review. We left yesterday with a pretty solid green market. Then turned pretty seriously. The Nasdaq ended down. The Dow ended up a half a point. S&P was effectively flat. This morning, the Nasdaq is continuing to take it down a point. The Dow in futures is up about another 0.5%. S&P flat. Um, there's a lot of movement going on in a lot of different stocks. I'll sum it up this way: the economy, based on, and I will get to earnings in a bit that will kind of back this up. The economy is strong. The question is whether everything relating to tech, chips, data centers, energy is overvalued. I think that's accrued some. Uh, just to give you a sense where we are on the tech side, the Kospi, South Korea, was down close to 11% last night. So, and that's Samsung and SK Hynix. I'm sure, as Dave Nikoski will tell us, there are some gems in that puking of an index. But if your index, your Nasdaq, your S&P, your Dow, your Russell, whatever, was down close to 11% in a trading session, we'd be in big trouble here in the United States. Samsung down 13%. I didn't see SK Hynix. SK Hynix is due to report earnings. We had earnings out this morning from the likes of UPS, Boeing, PayPal, Coca Cola. I think it's a pretty good swath of companies in terms of diversity. Coca Cola, incredibly well. Stock is up north of 4% in the pre market. Revenue beat, earnings beat, operating margins beat. UPS, also revenue higher than expected, earnings per share higher than expected, up 14% year over year, operating margin up. So things are moving about, and even with easing out of its relationship with Amazon on the UPS side. PayPal, which has been beaten up and awful, earnings beat, revenue beat, payment volume beat. And UPS, sorry to go back to UPS for a second, they raised their full year revenue by north of $1 billion. Boeing um, came in short on the earnings per share, but beat on revenue and is now free cash flow positive. So, based on those reportings, I think things are doing well. I'll just throw in Tyson Foods and JBS, both meat processors, rose substantially yesterday because the Department of Agriculture announced a restart to Mexican cattle imports. Because, on the one hand, we've had very high beef prices here, and bringing in Mexican imports will allow prices to ease potentially. They had been paused because of illness to cattle in Mexico, screwworm. And as a sign of the weakness of the gig economy, Uber is down at 52-week lows. but with that mashup of companies, I'm going to go ahead and pause. I think one of the biggest, so we'll definitely talk about AI chips, everything there. There's some more news out in terms of deals being done and data centers being built and so forth. But one of the other headlines overnight was that Citadel is expecting a rate hike tomorrow. And now, folks, because of that headline, folks are all concerned about maybe not a rate hike tomorrow, but maybe enough rhetoric to prepare everybody for a rate hike at the next meeting. Andy, in your circles, you know, how important was the Citadel opinion? Does it change anything for you or colleagues?
No, good morning and good morning, everyone. It really doesn't change kind of the expectations and market expectations. If you look at probabilities and where kind of rates are trading, um, it's kind of a coin flip that they could raise to higher this meeting, but really September is what seemed in play. So not a big change there. I mean, should they hike? Absolutely. The economy's doing well. Employment print was strong enough to say, hey, we don't need to leave rates where they were. If you look at claims data, et cetera, except, some of that data is tough, especially in July with seasonal workers, et cetera, coming, rolling on, rolling off. And then you have the whole autos where you've got a lot of, retooling of factories. So employment numbers can get a little bit messed up in July and in June and July. So when you look at all of this, really, I think, like you said, I think the play here really is to talk a hard game, come as hawkish as you can, and set up the potential for the hike in September. If they go, I don't think that that's what's going to happen, but I do think that's what should happen.
Awesome. Thank you for that. Let me add a little bit to that. Look, money moves quickly and easily these days, as we talk about in terms of compression of cycles, people being trades being easily executed. And so, if you have a toss up on the decision and certainly the rhetoric out of tomorrow, couple that with the questions being asked and maybe the answers that will or will not be provided from the earnings that are coming from semiconductor manufacturers and hyperscalers. Um, and you've also got, the dog days of summer coming soon. Maybe it's just a full de-risking that is going on, and folks thinking, what, why should I play into this market necessarily because of all that potential risk. Maybe it's best to go away for the rest of the summer and catch back up in September, um, after a lot of these questions are answered, in terms of what is the Fed going to do, how overvalued or not the AI trade is, um, and just, potentially perilous days of lower liquidity and maybe higher market movement of August. Brandon, good morning. Let me get to you about two things. First of all, Meta and BlackRock announcing a JV to operate a 1 gigawatt data center in, I think it was Plano, Texas. Costs all in about be about 14 billion. The campus will go online in 2028. BlackRock will own 80%, Meta 20%. And then the other thing, oh, I'm sorry, it's not in Plano. Forgive me. It's in El Paso. Forgive me. And then the second thing was Dario having to vocally say that he and his company are not pushing to ban open weight models like those coming out of China. I'll let you rant on the second one, but please address the first story too. Good morning. I cannot hear Brandon. Let's see, get him back.
Nor can I.
Brandon, you with us now?
I am with you now. How's it going?
Okay. All right. Good. Did you hear me at all?
I heard parts of it about Dario and but I did hear the Meta Facebook one. Yeah, I'll hit on the Meta Facebook one. That one's great in El Paso. I think that there. What's interesting about this one is it's saying that Meta is going to be the only person that is operating in there. So obviously they need a lot. I guess that shows how big they're trying to go on this, how hard they're trying to invest in this. I think we've talked about it before. Other people have hit on it that when Meta goes all in on something, they go all in. I mean, we saw it with the VR stuff. Obviously, didn't work out. The metaverse stuff with whatever the cartoon people that obviously didn't pan out, and it looks like they're making another big bet. Personally, I think it's the right one. Um, but only time's going to tell on that. As these data centers and everything seem to be struggling nationwide here, but I still think it's the right bet for them. As far as Dario, I mean, there's not much to touch on here other than what we've talked about in the past. He was forced to make a statement on it. I think that if you read the statement and read between the lines, I don't know. I'd love like a Yawn or Eric to touch on this maybe a little bit more. If you read between the lines, yeah, they're saying they're supportive of open weight as long as it's these small models, and then as models scale, they're not supportive of it. He's going down the path of again saying the stuff is too dangerous, and I just completely disagree with it. I mean, I've been vocal about that. I completely disagree with that. And I think that they're just trying to hold back any type of competition. But it is funny that Dario had to come out and make a statement. I don't know, and it's funny. I'm going to look for this post. Sachs posted it and talked about he got ahead of Dario's paper that came out, talking about how. What the excuses Dario would make are, and kind of the gaslighting on it, and it was basically word for word, bar for bar, and so that was interesting. I mean, there's so much money. Again, I think we're seeing to back to the markets, I guess. And again, I'm not a big public market guy, but to get back to it, I mean, I just think everybody's anticipating more so than a rate kite. I love the way Andy broke that down. I agree with them, but even more so, I think they're just anticipating the spend on AI to go down, these valuations to not make sense. And that's going to be a hit, but I think it's a short term hit. It's not, I don't think anybody's saying AI is not going to be valuable or these companies aren't going to be valuable. These companies aren't going to be great. I just think it's not going to be yet at the scale that everybody got a little overexcited in the private markets, needed to put money somewhere. And, it kind of blew up from there. So, yeah, Eric, Jan, whoever wants to touch on it, and I get DMs. I don't know, like David. I'd love for you to touch on this. I get DMs from people all the time and from the audience that are very knowledgeable on this stuff. And they'll say, oh, well, you should mention this. You should talk about that. Like, guys, if you ever want to come up on stage, like nobody's saying you can't. I think it would be great to have some different voices up here to come up and just and either reaffirm what we're saying or push back on what we're saying. It just helps move the conversation along. And I always say I like talking with people, not at people. So that's my 2 cents for the morning.
Yeah, I'll agree on that before we get to Eric's hand. Yes, I do get DMs from folks making points, and I always invite them up on stage. And I found one of two things: either A, they have stage fright, which no one should. You know, you're not getting graded here. The second thing is sometimes some of our listeners are actually concerned about their identity. They actually work in some very, not to give prominence to our show, but we do have some pretty prominent folks in the audience who do not want to be associated with some of the I don't know, information that they provide. So that's the other reason. But yes, the invitation is open. Please, folks. Oh, the only thing is that you need to be a person. Like we need to know who you are, either clearly and explicitly from your name and avatar, or you at least need to tell one of us who you are, so that we know you're not going to get up here and say something just wrong for the show. Let's put it that way. Eric, go ahead.
Yes, and that you're not getting to be an AI, which will soon come. Good morning, everybody. Are you hearing me well? Is that good?
Perfect.
Okay. For those in the audience who don't know, this is my alternate account on another phone, which hopefully has much better sound quality. If it doesn't fix it, I'll change it again. So to go back to Anthropic, essentially, yes. Well, we've talked about it for a while. Brandon, sorry, Dario. Brandon, you've become Dario now. So Dario is just essentially he wants the monopoly, and there's a little bit which is fear. There's a little part of his thing which is fear, and the little part of what he says, which I do understand, is the fact that it's going really fast. We don't have control over it, but he's the one who went the fastest. Yeah, we have to also put this here that he's the first one who got to a mythos level and whatnot, and he's progressing from there for sure. And so we, the moment we accepted ChatGPT in 2023, we accepted that the AI race was going to be on. We didn't stop it then. We could have stopped it then, put the whole regulation, the whole debate. But the whole market decided, including governments and companies, that we're going to go and do the AI race. So the AI race is on. If anything was proven during the incident, what was it, 2 weeks ago, with ChatGPT and Hugging Face, is that it was the Chinese GLM model which saved the day because it didn't have any restrictions or whatnot, or very few restrictions. Sometimes it still has a little bit of them. But this is the proof that a system, to be safe, would need such models that are not too regulated. And security is number one for all the firms out there. So the argument of Dario falls off the window. If he said, for example, that yeah, you can have only one model that was available. If there was only one Chinese model available on the planet, and Dario would have an issue with it, he would say, "Well, I don't know. If this is the only thing the customer can choose, then maybe there is a risk." Blah blah blah. But there's so many models out there. There's going to be European models. There's going to be American models. I mean, even Google does some free models. I mean, Gemma is one of them, right? And they're going to continue to develop them. So I think his argument doesn't stand, and for that, there's going to have to be an acceptation of open source models. In fact, I would argue that it is so critical that the US does accept it at this point, because again, we are where we are, that if they ban it, companies will just incorporate themselves in other jurisdictions than the US and then use whatever model they think is best for whatever product or function they're trying to do. That will be to the detriment of the US. So it's not a good idea. Heading into the future, I think, just like I've been saying for a while, what will become popular is you have an orchestrator of models which looks at the needs that you have and distributes according to a free one. If he can do it with a free model, then he will do it and it's free for you. If you need some raw power or more efficiency or more advanced reasoning, perhaps, and for certain needs, because there's millions of AI needs out there, right? Millions of companies with millions of people, so many different things that they can do. Then that orchestrator will choose a more advanced model. So we're going to get an intelligence in an orchestrator. So that kind of intelligence will be developed to identify the complexity of a request and how to distribute it amongst the different models. So this is coming, it's starting, but it's going to be something which will get more popular over time, and it will at the same time enable to have that redundancy and that hedge that Timothy was talking about, that you do not rely on a single model. Yeah, so having a system like that in place will become, I think, in my opinion, architecturally more and more popular out there. But I think Anthropic is going to lose that battle, and if it doesn't lose that battle, then American businesses are losing, because many of them will have to incorporate another arm in another jurisdiction, and even new startups will be more motivated to incorporate in another jurisdiction. And I don't see how this is beneficial for the United States of America. Heading into the future for the fears of AI, well, having all the other companies together, like what is happening in the last few weeks, we've seen Mark Zuckerberg, we've seen Jensen Huang, we've seen Elon Musk, we've seen just about everybody except Anthropic agreeing to go that direction, which means they're going to agree to help each other to regulate themselves, verify, especially so not very regulate, sorry, but verify themselves to make sure their AI is not too dangerous. If they go that path, I think it is the best way because they also have the qualifications to do it. You cannot ask somebody who just in government, who hasn't been doing this type of AI for a while, to come and evaluate a model. They will not be specialist enough. And if they do want to get the specialists, they're going to have to pay above the president of the United States pay grade kind of thing. I might be exaggerating, but you know what I'm saying. And the government functions with, I don't know the US, but every government in the Western world, we have like these hierarchy of you're that level, your position is that level, your salary is 80K, that level is 90K, 150K. And if you're president, I think it's 300K or something, or whatever. So to have big talent, you'll have to compete with the big tech. So I don't think the government can do that unless they change also their internal regulations for hiring. That's important when something goes at scale. We ignore it when it's something small, but when something goes at scale, you need to have a government arm which is capable of interfacing with it. So it's also going to be a question in many countries around the world as big talent gets poached. Maybe 5 to 10 years down the road, we have so many specialists that this is not an issue anymore. But for the moment, it will be an issue. Back to you guys.
Excellent. Thank you. Jan, good morning. Welcome. Good to have you.
Yes, good morning, David, and thanks for having me again. Do you hear me well?
Just fine.
Okay, thank you. Yes, I thank you, Brandon, for the shout out, and I have been following this the discussions and the letter and yeah the points about remaining open, staying open, uh, and yeah to not close down access towards the more open models and things like that. To be honest. I think there's a lot of over excitement and over communication, and there's a hyper attention about AI that we are missing a very important subject I would think of, and that is the adoption. Because to be honest, if the models are open, if the models are closed, to be honest, I don't care. There is so much value already in both the closed models and the open models that we are not even using 10% of the capabilities of those. And what is the adoption in all the enterprises and brick and mortar companies, the small companies, the mid-sized companies, even the big companies? The value is not yet created there, even if the models would just stop developing from day one. Even if we would be, let's say, 1 year back, all that capability is not yet, let's say, being used in the enterprises yet, and in the small or bigger brick and mortar companies and operations yet. And to be honest, I think the attention, the hyper attention about, yeah, which is the best one, which has the newest, and now we're talking about loops. This morning I heard OpenAI talk about singularity as here. First thing I did, I looked outside if I was still alive, but yeah, apparently all is good. But I mean, there's hyper attention about this the models and always being the best one, while actually the real value is then are the companies really using it? Are the employees using it? Where is the value creation already there? Do we already see cost reductions? Do we already see revenue increases in the enterprises and brick and mortar companies due to this? And not only the 40% tech, which is the 40% of the value of S&P as tech. Where is the 60%? And that 60%, do they already adopt all this? And I think I'm missing some information on that side. And so I think the adoption is really the most I think the biggest leap now. So I'm advising people, and some people already chatted to me via chat. I'm advising, have forward deployment engineers in your company. Really, the best one is somebody in your own organization that knows you already 5, 10, 20 years and wants to do something differently. Make a forward deployment engineer of it. If you don't have it, go grab on the market forward deployment engineers and really transfer your company in a AI first company and really adopt it. And to be honest, if it's closed, it's open. That is a secondary. I mean, I understand the strategic one and long-term vision, yes. But for now, I mean, open is good, closed is good. Use it. That's what I would say. And finally, to my final comment on that is, I mean, I even see posts and commentaries about, yeah, Anthropic is evil, and it's really like Star Wars, the good versus the evil. To be honest, I mean, it's logic that they are protecting their yeah, they don't have like Google a whole vertical products. They only have one product, that so that they're protecting their product. It's quite logic that they are doing that. And it's also not like in China that, for instance, those yeah, companies are really subsidized by actually the people. So or are we going to give all the tax money then to Anthropic to then have their models open? I don't think that is the right direction as well. I don't. I think Anthropic doesn't want to go the road of American Online, that also had the idea. Okay, internet is starting. We're gonna give everybody internet for free. We know how American Online went at a certain moment. So, and I don't think Anthropic wants to do that. And yeah, so yeah, so that's that. Those are my thoughts on that.
Yeah, great points, and I want to hit on something real quick here. I think mostly you're right, or I'll agree here. I will say that it seems like we're being more proactive than reactive, and I view that as a good thing. Like you're seeing, we're having these conversations very early. Adoption's not like may not be there just yet fully across the board, but it is going to be. And even in these enterprises and places that you're talking about, the small to medium businesses and even large businesses, you can guarantee employees are using it, right? It just may not be fully sanctioned by those employers. Like, but the employees are 100% using AI almost daily. And but yeah, we do need. I love the forward deploy and engineer thing. I think that that's a brilliant strategy. I think every enterprise needs somebody in there or a team of people in there that are owning it and taking ownership of that and helping the team expand on it. But again, back to the conversation of why so many people are talking about it. I mean, that would be like when banks are first starting, saying like, "Oh, everybody's talking about banks before every consumer has a bank account." Like we want to have these conversations early. Laws are being made around this. You know, Anthropic has put $40 million and Dario $1 million himself towards super PACs to, you know, about AI regulation. And you're right, they are trying to protect their business model. That's it, but that's the bottom line. But like at the end of the day, don't have the conversation from, I'm saying from their point of view, that everything that they're doing is for the best, it's for safety, it's for your protection. Like we've heard that a million times before. And to be honest, it's just them trying to protect their bottom line. That's it. So, you know, if you're going to have that conversation, if you're going to do that, be open and honest about it. Don't, you know, try to sugarcoat it with all the, you know, protection. It's, we're doing it for you. This is for your protection. If this happens, it's too dangerous. And, you know, people can have whatever conversation around that they want. Dario penned a paper when he worked at OpenAI, the GPT-2 was too dangerous for public release. I mean, come on. So, you know, he's been doing this for a long time. I think the people saying Anthropic is an evil company, whatever, they can do that. But the reason they're saying that is because the messaging has not matched up with their actions.
If I can jump into that very shortly, is that, to be honest, from Palantir, Alex Karp also is using the safety card to promote his objectives. And then it's the other route. It's rather less the regulating card from that Anthropic is using. It's more the openness card. Like it can only be safe when it's open and everybody can have a look at it. Own your own models. Have a transparent application layer, and everything is open and free to look at, and that's the safest route. To be honest, I think everybody is using safety for their own, let's say, objective that they want to achieve. So Anthropic wants to use it and say, look, let's first use it closed and in a small group that we select. Let's audit it and with a lot of regulation so that smaller companies cannot even start with becoming a model producer and things like that. While Anthropic is rather going to the open route. I think it would be good that both are there. They have to remain. They have to exist. I think they both have valuable, let's say, objectives, but also reasons. Alex Karp is right about the application layer, and that's also a part of that forward deployment engineering. But on the other hand, he is always stressing about and the models are stealing your knowledge, and it's about the safety. But a lot of our companies, we are bakeries, we are contractors, we are let's say we are not all building nuclear power plants or nuclear rockets. I mean, let's say I would say 80% of jobs that is being performed is it's not let's say as risky that you directly need to have a Palantir environment for that. So and that you can go for a product that is more enclosed and that doesn't show all that openness, but of course, if the product that you're doing is less risky, why should you go that route? So yeah, that's my two ideas on that.
I'm just going to add a couple of things there. You remember when you said your analogy with America Online? Well, there's a little bit of a difference there that if you provide a physical service like America Online free, it's difficult. Whereas other stuff like Google is free, right? When you do Google, it's free, so the models might be going more and more that direction, and so they'll have to adapt to that reality. I'm not worried about the valuations at such of these companies because even if they're valuated, let's say Anthropic and OpenAI, let's say they're valuated at 100 billion or 200 billion, uh, they can be prime target for acquisition by a bigger company, which still is solid in its revenues. For example, Apple, for example, Nvidia, whatever it is. Other companies which have solid finances and are going to continue to have cash flow no matter what, because their product is going to be continue to be in demand, especially on the hardware side. They could then just buy Anthropic or OpenAI, kind of a consolidation. I mean, Elon did consolidate his Twitter in XAI, then his XAI in SpaceX, and there's a good chance, in my opinion, that some of these other models will consolidate into one of the other players because of cash flow reasons, unless the government starts giving them contract to keep them afloat. Back to you.
Excellent. Thank you, Eric. Away from everything AI related, right? To go back to, I'd say, staples and old line economy. Unilever uh, company bumped up its full year outlook. Quarterly sales volume surged to a 16-year high. Even with the K-shaped economy and even with concerns around affordability, nevertheless, um, consumer staples, at least certainly certain ones, have been able to keep up and have figured out a way to continue to grow. And I think that's important in the context of understanding the market movements that we're talking about. Carlo, good morning. Certainly want to hear about the latest and greatest relating to Clarity. Also, if you have any thoughts around Justin Sun's allegations, litigation against the Trump family and Liberty Financial. It seems that if that case does proceed and there is a fair amount of discovery and it goes further than just some sort of early settlement, this may be something that the Trump family may not want to be out in the public sphere. Good morning.
Good morning, David. Good morning, everyone. First, on the Clarity Act, I think that we are starting to see panic in the air from the anti-crypto side, and I suspect that you are going to see this week, as this thing starts to near a potential vote, which it looks like by some reporting has been pushed to the beginning of next week. I think they are slow walking it to the floor of the Senate because they're trying to use what little precious time they have left to try and bring some votes over to get it done. But I think in the meantime, as we come to the close of this, you're going to see a full court press by a lot of the usual suspects from the anti-crypto pundit circle who are going to be posting a lot of comments this week, projecting a lot of fear and suggesting narratives that simply just don't add up. One of which is that if you support the Clarity Act, then you support the Trump family and what they characterize as their pilfering of crypto for their own gain. And the irony of that is that all of this alleged, again, there's definitely arguments to be made here that there was a lot of money made by the Trump family in crypto, and it's plausible to say that a lot of that came from inside information. So it's not an unreasonable argument to make. However, a reminder that all of that happened in the absence of legal clarity. So they are suggesting that the status quo is better, that this bill is not a meaningful enough guardrail, and that we should vote against this bill and leave everything the way it is. And frankly, no bill is perfect. No law is perfect, but there is no guardrail in the absence of legal clarity when it comes to crypto. And this narrative that you're going to see pushed by a lot of these anti-crypto pundits as we get to the finish line of this bill are going to be to stoke fear that if you support the Clarity Act, you are indirectly supporting the Trump family profiting from crypto. And that's ludicrous, because there is far more at stake here. And frankly, it is not any different than how politicians have profited from any other access to information, be it in traditional markets, et cetera. So that argument tends to lose a lot of its momentum, but I think it just shows the desperation as we get to the final stretch here. So take all of that with a grain of salt, and remember that it is more dangerous for the consumer in the United States to have no crypto clarity, no legal structure, and it is far more dangerous for the growth of the sector to have no legal clarity and no legal structure. But this is the final narrative that I think has to be pushed in order to try to successfully kill this bill, that it would be better to have no law on the books than to have this law. And I think that's just frankly ridiculous, and it will probably fall flat. I still think there is a chance this thing is going to pass. I think the deadline of August is also in play, David. There has been some talk and some reports that Trump may exercise executive privilege to force Congress to stay and get this piece of legislation done. He apparently has the power to stop the recess and force them to keep working. And I could see that being a potential play here because of what is at stake. With respect to the Justin Sun World Liberty lawsuit, obviously he feels like he got jilted, and he did file his lawsuit, and discovery is going to take a long time to unravel. And is there meat on the bone to these claims? Remains to be seen. The timing of that lawsuit and what could be revealed certainly will cast more light on what we just talked about, which is how the Trump family profited from crypto. And look, investigated it. Get the gavel in the next election cycle and investigate all of it if you want. But that should not be a reason to kill legislation that regulates an entire sector. You should not hold an entire sector's progress forward hostage based on what you perceive to be the bad acts of one person. I just think that that is not the way forward, and it will ultimately hurt the United States because the rest of the world continues to push forward and innovate in this sector, and we stand to fall behind. And we know what that looks like from the last market cycle. Regulation by enforcement pushed so many companies into the courtroom for needless litigation because there was no crypto certainty, no clarity as far as what you could do legally in this country. And the ones that didn't want to fight in court went offshore. And if that's what you want for this sector, then I don't think that that is the ultimate good for the United States and its position globally when it comes to this asset class. As far as the markets, obviously Bitcoin dipped along with everything else last night because there is persistent fear that rates will be hiked. And I tend to agree with Andy. There probably is an argument to be made that they should, but I think that they will be more motivated to keep running it hot. And I still think, in my opinion, no rate hike is coming. Back to you, David.
Awesome. Thank you, Carlo. Just to give a little bit of context to Carlo's remarks, folks, I know I asked Carlo to give us the daily update on this, and Carlo has been following everything going on with Clarity very closely. But if you think that Carlo's obsessive about this, it is not true. There are other folks in the crypto sphere that are spending every waking hour in Washington, D.C. right now, knocking on doors and talking to people. This has become a political football. It has become a very partisan issue. Tallying the votes is going to be, or getting to the right tally in order to get it passed, is going to be a challenge, and there are a lot of people working on it, because at the end of the day, this really isn't something that should be partisan. Look, I agree. No one should be doing anything unethical with respect to any part of the crypto ecosystem or finance generally, for that matter, inclusive of congressional members trading on insider information. But all that being said, to hold up innovation because of other, I would say, extraneous points would be inappropriate. And so, yes, this is going to come down, to the very end of the session, and maybe stretch further. And we will keep you posted on it because we do think it is important not only to valuations in the crypto space, but generally to commerce more broadly. With respect to Japan, so there is a magnitude 7 earthquake that has hit. Not that that's important for this show, except for first of all, obviously any tragedy is important for this show. Hopefully everyone, hopefully there aren't any fatalities. But TSMC has evacuated the workers from its factory, which is not far understood from the I don't know, I guess the 7 magnitude of this earthquake. At the same time, Japan's stock market is in technical correction. It's down more than 10% since June's all-time high. Yields continue to rise there. Currency has been weak, and so this we will only know in the upcoming days, what the fallout from this is, but clearly not something that that the Japanese economy necessarily, it's certainly something that it doesn't need at this point. Um, Anas, good morning. Are you with us yet?
Good morning. Yes.
Go ahead.
Good morning, everyone. Several things today, and let's start with oil prices. As you know, oil prices dropped significantly yesterday, and they continue to drop today. They dropped by up to 2% earlier today, and now they are about 1.5% down, and Brent is below 87. There is a big debate raging right now among analysts and others, those who are interested, especially various retail investors, on the manipulation of the oil market. They are talking, of course, about jaw boning on one side and intervention in the oil futures on the other, which means that the Treasury Department is buying and selling oil and playing the market. Generally speaking, when it comes to job owning, basically, I think this has become an old story already. I don't think the market is reacting to it. They are reacting to the news of possible renewal of the MOU or something like this. But the issue of intervention in the futures, I think this is seriously the biggest issue. And if you are selling and buying just to manipulate the market, this is a serious problem. Not only because the government is playing the politics before the election, the issue is you are creating a wedge between the physical market and what the price in Asia basically is and what the futures are. And my biggest problem as someone in this industry is the confusion it creates among analysts and everyone else. And then we get the phone calls trying to explain, and there is no way to explain that to people. So a lot of people will panic as a result, and they'll tell you oil is uninvestable, and I'm not going to be near the oil industry, etc. And people are shying away, and this goes against even what Trump wants, because Trump wants to increase production, want to increase in supply, etc. But what they are doing in the market, basically, they are literally scaring investors and forcing people out. So that's the first idea today. Now, back to the attacks on Saudi Arabia. There is a lot of confusion there, and I would like to explain a few things here. First of all, the main oil fields in Saudi Arabia are in the eastern province along the Gulf. There is some oil around, and especially gas, around Riyadh area and the central area and the southern area of it. In the south, in the if you look at the map and you look at the southwest near Yemen, there is a big town there called Jazan or Jizan, depending on the pronunciation, and it has a big, massive refinery that Saudi Arabia built in recent years. And the attack happened from the Houthis. It happened at the refinery. The problem is there is a lot of confusion there because the social media created an atmosphere for people to just tweet anything or retweet anything. And as a result, we've seen people, even respectable people with big accounts, tweeting things from 2016, from 2011, from 2019, not only from Saudi Arabia, basically, even from places as far as some European cities, which forced me to tweet that I cannot believe someone will show a burning building in a European city and telling us this is a refinery in Saudi Arabia. And you can see it's a building in the middle of the city. That's how stupid it got. So has the Houthis attacked Jazan refinery? Yes, they did. But most of the videos that we've seen are not related to the event at all. There is only one single video until the satellite pictures came out later on. There is only one true video, and that's it. Everything else was fake. Everything else was from a different period. And I did identify the location of that video, and I posted the map, and I posted all the related. If you look at the angle, etc., you can see what's going on. So that's one. Yesterday there was an attack on a big complex called Bgeg. This is the same complex that's been hit in 2019. And while everyone was saying, look, this is a Houthi attack, the Saudis were very clear on this. and they said this attack came in from Iraq, and they declared officially that the attack came in from Iraq. If you look at the map and look at the location of the attack, you'll be convinced that it came from Iraq because of the distance or the massive distance. At the same time, you got to be very careful with the attack because the attack was so precise that you cannot do it with this massive distance from Yemen. So there were attacks on Bghaig. Here is the problem with that. The first problem is whenever you hit a storage tank, it has, let's say, 100,000 barrels of oil. You will see smoke going through the air like hundreds of feet, and you can see it from very far away, and you can see dramatic fire, dramatic pictures, etc., but only a storage tank. And we talked about this before. And people were talking about as if the whole of Saudi Arabia is burning. It's only one storage tank. And there were probably 2, 3, 4, 5 storage tanks. At the same time, when you have fire at a refinery because you fear, or any facility, you fear that fire will expand to other parts of the refinery or other part of the facility, so you shut it down, whether you are in Houston or in Aberdeen or anywhere in Russia or Brazil or anywhere else. That is the standard procedure. And when you shut down the facility, you have to flare the gas, because what you are going to do with the gas? When you flare the gas, you have too many flares. NASA sensors that sensors the heat from the space show you that there is a heat source there. People take that on social media and say the whole complex on fire, while it is only flaring. So the bottom line here is, yes, there was an attack on Jazan. Yes, there was an attack on Bghaig, but the impact is limited, and the shutdown basically is warranted because that is an industry procedure. And don't be fooled by the smoke that you see, because if it's only one tank, has 10,000 barrels, whatever, is going to burn. And the easiest way for any operator, especially if the tank is isolated, is literally to let it burn. So some people come in and say, it's still burning. It's been 2 days and still they're burning. Well, what you are going to do? So what? These are some of the issues. The problem we have with Gig is we have big accounts that depend heavily on AI, on Twitter. And those big accounts, basically, they never heard even of Gig. But they saw the news. All of a sudden, they went to AI and tell AI, oh, tell me about what happened in Gig. But this news just happened 1 hour ago. So AI is going to pull the event of 2019. So those big accounts basically literally wrote about 2019 as if it happened yesterday. And they have quotes from the energy minister and quotes from others from 2019. And the problem is they refused to pull them out. Although they're being called out on this, they refused. They did not even apologize. And they kept them there. When someone does like this, you know they have an agenda. You know there is a reason why they keep it there, to fool people. So when you see the Saudi energy minister has not made any statement yet. If you see a statement, especially with a text with highlighted with yellow, this is from 2019. So these are some of the issues. The other issue is people are saying, how come I have this event at Gig and oil prices, when Gig was hit in 2019, oil prices went up by 20%. And now, yesterday, they went down by 7%. And that's illogical. Well, they are missing the point here. There are two issues here we have to pay attention to. First of all, when the September 14, 2019 attack happened, it happened all of a sudden. There was no war, there was nothing. We just woke up in the morning. I remember I was in Riyadh that morning, and it just happened. That was a big shock to the whole market. No one expected Aramco would be hit, and it was a very bad hit because we lost 5.5 million barrels a day. So, first, it was a surprise. There was no war, there was nothing. Second, it was so big, and that was important. Third, demand was rising, oil demand. We don't have any of those today. We have a war. A couple of days earlier, Saudi Arabia was hit, so the expectation that it could be hit somewhere else. So this was not a surprise, and the impact is very small. Here is the other issue related to this. You cannot kill the horse twice. So if Saudi Arabia cannot export from the east, if Saudi Arabia cannot export from the west, whether their production is attacked or not, it means nothing to the market. Why do you expect prices to go up if they cannot export that oil anyway and something happened? That's why I put this tweet with the analogy of the restaurant that I said, kind of a story that I made up, where okay, here is a street that is completely closed. My restaurant is in the middle of that street, and all the stores are closed, being closed for 2 months, and then for some reason I have fire in the kitchen today. So I have fire in the kitchen in a restaurant that's been closed for 2 months, and all of a sudden the media is saying that people are going hungry because of the fire in my kitchen, while the whole street was closed. That was another problem that people did not pay attention to. You cannot kill the horse twice. Regardless, oil continued to flow through Bab el Mandeb, including Saudi crude. As we speak, a Pakistani tanker carrying Saudi crude is passing through Bab el Mandeb. And as you know, in the last few days, we have others pass too carrying the Saudi crude. Now, notice the following, and probably this is the most important information you'll have today from me. Notice what's going on. Saudi crude is passing Bab el Mandeb as long as it is carrying or it is being carried on non-Saudi tankers. Let me repeat that. Saudi crude is passing Bab el Mandeb as long as it is being carried on non-Saudi tankers. And you might think, well, Saudis are afraid that they will be hit by the Houthis. Well, remember the following. London insurance companies stopped providing war coverage insurance to the Saudi tankers. Let's keep that in mind. Why the insurance is because they think, well, probably the risk is too high. Well, okay. Let's see what happened last week in Hormuz. The same insurance companies told shippers if they pay Iran to pass, they will lose their insurance on the spot. Not only the war insurance, the whole insurance. Why an insurance company will do that? They are not a foreign ministry. They are not the State Department. They are not the Treasury Department. Insurance has entered the war. Insurance has become a weapon. There is no reason for insurance to tell companies, if you pay the Iranians, we will cancel your insurance. Where is the irony? Because the whole argument all along was insurance has to increase premiums because of the increased risk. Well, here we have a decrease in risk and you have cancellation. When a company paid the Iranians, they reduced the risk, yet the insurance are canceling insurance. I would like to go back to what I call the three C's crisis. The three C's crisis that the Gulf, the Red Sea, and the Black Sea. And now, of course, we have the Panama Canal because of the low water. And we have the Rhine River is at its lowest level. The water in the Rhine River is at its lowest level in 36 years. Why this is important? Because ships are grounded, barges are grounded, and they carry all kind of petroleum products and everything else. So Europe basically got nailed again with the energy supplies, and things are getting worse. Libya announced the restart of production at two fields after problems there, but seems those problems are going to happen again. Qatar extends the LNG force majeure to Europe and Asia. This was of course expected. It's part of our model that this is going to last for a very long time, but it's a legal procedure the Qatar Energy basically has to do. We've been talking about the airlines and how the cost of jet fuel basically are affecting them. We mentioned several in the past, and today Singapore Air, or the stock of Singapore Air sinks, and simply because there is a major loss because their bill of fuel soared to $776 million. And the final point here, Europe power prices set to rise again above hitting records because of the heat wave. So the problem is when we have this heat wave is not only the demand increases, but you end up with drought, you end up with low water, you end up with the use of the all the backup you have, and once you lose the backup, once you use the backup, then there is no other backup. So if you have problems with your backup, or you don't have enough fuel oil or diesel, then you have a serious problem. And guess what? One of the sought after products these days is diesel. Back to you.
Amazing, Anas. Thank you very much. Paul Mangione, you want to join me up on stage? If not, that's okay. I just wanted to talk a little bit about New York City with you. But if you can't get up, I totally understand. New York City, near and dear to my heart. Um, so we now have a second building in New York that has been here's Paul, that has been paused in its conversion process from office to residential. Maybe there will be more. Certainly, Paul, I'll let you speak about what you think the oversight is going to look like post that building that buckled and pre. In addition, please go ahead and talk about Mamdani's grocery stores, uh, and then finally, the Pierre de Terre tax roll that has been
Oh,
published and searchable. Go ahead.
yeah. Yeah, I think the first thing is that there were two buildings, 222 Broadway, which was the former Barclays location downtown across the street from Trinity Church, pretty much if people know New York City. And there was another building, 332 West 11th Street. There was a work order for the kind of steel construction there. And then that was July 14th. So what the New York City Department of Buildings has been doing is two things. One, investigating all the entities involved with the Pfizer building construction and looking at all their other jobs and doing, I guess you call it sweeps and sweep inspections uh, there and making sure everything's being done up to code and safe. And so that's what's developed these stop work orders. And then also generally doing what they should have been doing, which was regular inspections, regular reviews of plans, reviews of the contractors, the crews, the equipment, the steel, the schedules, logistics. Uh, it's kind of like, when you're a little kid and the teacher never checks their homework, and then all of a sudden starts checking the homework, and everyone's like, "Oh crap!" Like there was like 15 kids that kind of had never done the homework the whole semester. They're like, "Oh, we got to start doing this." So it's kind of like people are now doing the things they should have been doing from the city's standpoint, and then maybe the contractors as well. Everyone's gonna have to work a little harder, but ultimately that's a good thing. It's going to slow things down, definitely for those two projects and for the Pfizer project, and then our ex-Pfizer project, and then everyone's going to definitely be dotting their I's, crossing their T's in a way that they maybe weren't before. So, that kind of slows down the whole process. But let it, let that sit there. In terms of the grocery stores, I think grocery stores like work on a very very small margin, as everybody knows. 2% is the average. Not every, that's the average. Not every product has a 2% margin. Some has larger margins. The typically produce, certain kinds of produce and bread that has a very small margin. Packaged food sometimes has a very large margin, but they always say they average 2% after everything. That's their profit margin. So the fact that the Mandami administration was saying they're going to have things at a 30% discount to retail prices. I don't know what that means. I haven't seen a list of kind of item per item, but I think if they could do it and not like be extremely expensive, like there's this store called, I think people are familiar with Aldi, and there's another one, Lidl, where they sell specific products at very big discounts, uh, but they only sell certain products, right? So you could possibly have very large discounts on specific products only, but it becomes a limited items, and they're going to sell out fast if they don't have the logistics to kind of replenish the things. It's going to look like a 1980s Soviet uh, food store, like where there's to be like three things on the shelf and everyone be rushing in when they drop in the toilet paper or something like that. So, you know, great if they could do it. I think it's going to be tough, but I'm willing to watch and learn. I don't know if anyone has any view of the grocery business, but it's a really tough business, and it requires large amounts of logistics and expertise to kind of get everything right at the right time to make a profit. So they're public, so they don't really have to make a profit, but they shouldn't lose tons of money. And I think that's what's probably going to happen. They're going to probably lose tons of money. But let's see what happens. And I know it's been tried in other cities in the U.S. at least, and it's never worked. So maybe we'll get it right this time.
Maybe he's going to start with 5 stores, and we'll see where it goes from there. On the point of affordability, um, we didn't cover this previously, but I'm assuming folks generally saw that Apple is now offering upgrade leased devices. So you can no longer afford to buy your device, even if you can't even afford. Forget about buying it outright, but even on the payment plan that Apple offers, you can't afford to buy it. That speaks to two things: a, how large the price tag is for devices now, and certainly, as the fall comes and we get the first foldable iPhone and so forth, that's one. And then on the other hand, at the same time, how much affordability is an issue for people. And so there will be leases on these devices now, for phones, for watches, for iPads. And in that vein, Apple is partnering with Klarna to offer that in the United States. Whether this automatically turns more people off from Apple and guides them toward a cheaper device or a more, I don't know, easily upgradable, devices that have better features and functionality in the Google or in the in the other ecosystems. We'll have to wait and see, but it seems that um, Apple has conceded to the fact that they cannot grow market share or even maybe keep their market share without offering this out there. I also wanted to give an update on Kalshi Poly Market. So Kalshi and Poly Market won an injunction in Minnesota after a federal judge ruled that the state law is likely preempted by the CFTC, or the Commodity Exchange Act, which is covered by the CFTC. The order is held until a final decision on the merits, but that is the initial likely ruling out of the judge. At the same time, we have a documentary coming out shortly, or Netflix does, as a matter of fact, called Prediction Games, which will be all about the prediction market and its players and its customers. And Kalshi demanded that Netflix take down the trailer because the trailer had something misleading in the trailer regarding betting in Nevada, which is not a state where Kalshi is allowed to operate. And so the trailer seemed to indicate that somebody in Nevada was using Kalshi. In fact, that was not the case. So they have now edited the trailer and they will take that snippet out of the documentary. But nevertheless, this is going to get heated. I'm not a big Netflix guy, although I do pay for a subscription for my family, and I guess I will likely watch this because it is of interest to me as it relates to the entire swooning ecosystem of prediction markets, sports betting, and everything else related thereto that I cover fairly often. David Dukowski, good morning. You've been awfully quiet this morning. Anything to add to the discussion?
No, I think that looking at Korea and Japan, I've commented on a number of posts, where people are, I'm going to buy Micron because it's a PE of 6. You know, it's I'm a technician. I get to live by a different set of rules, but regardless, it's the behavior of market participants as a whole or as a majority that pushes, equities into a certain position. I'm just going to abide by the charts. It saves me a lot of freaking heartache and headache and think that I'm picking the bottom. You commented about staples. I mean, there's so many staples names. I've been saying it for the last couple of months that the rotations are fast and fierce. And I'm seeing bottoms being put on all the old economy stocks across the spectrum. If you look at the advanced decline line in the market, it's right at near new highs. It's hard to believe when you have some tech companies down 50-60%. SpaceX has lost more market cap than half of the entire energy sector, and everyone still wants to pick a bottom. I'll let them pick a bottom. I'm not going to do it. As Anna said, energy is almost at the point where it's, you don't know a tweet. You don't, in my opinion, I think there's massive manipulation, but, proving it is another story. I think that, I'm going to stay with some positions there where market weight. So, it's less than 3% of the market. So we're not even like, even if you were slightly overweight at 4%, it's not going to kill your portfolio. But I think that you need something there in case something goes awry. And, money, the one with the most money is going to win at the end of the day. But I think you're building with all of this volatility you're having in it. I think that you're going to get a lot of underinvestment continuing in the sector. And that makes me, much more bullish on a longer term basis. So I'll take opportunities on decisive pullbacks where we get back to 200 days on a lot of individual names. I did it, a few weeks ago. I'm still well up in the names, but timing it is certainly going to be an event. My biggest concern is, again, looking at tech or the NASDAQ 100, it's, certainly not a pretty chart. The SPY is not a pretty chart. We're coming back to some support levels once again, and if we can't muster through that, your best bets are healthcare staples, the financials. I went through the Russell 3000 yesterday, and I found, I think, 4 regional banks that were negative to me. I mean, 4. That is a huge, sector weighting for the Russell 2000. As a George alluded to the other day, I think you're safer in RSP then you are in the SPY. RSP is the unweighted S&P 500. There's still a lot of names that are bottoming. I'm marking up, some of the paper and packaging names. They're all making bottoms. You have lumber prices ripping higher due to high diesel prices. So you're getting a lot of ancillary groups that depend on cheaper diesel, but they're going to get the higher price regardless. I've talked about some of the egg stocks, just to I caught these early, but egg prices are up 300% since July 1st. You're not seeing it at the grocery store, but and I don't know if it's high heat. I know that globally, there's a number of egg companies in India and some other countries that are at all-time highs despite their indexes down. You mentioned Korea. I mentioned several weeks ago SHG and KB. The ones that are going to make money in all this volatility are the financials. Um, if you had shorted the Kospi and went long SHG or KB, which are in the Kospi index, you're up 50% from when I mentioned it. So anything that everyone sold to get into tech, that's where I want to be. I don't want to try to pick a bottom in tech. Um, I'll wait for it to happen. I think it needs to be on apathy. Number of companies that reported today, everything from Corning is down big. Celestica beat raised guidance down, in the pre-market, pretty, a pretty good chunk. So I'm just not going to spend a lot of time in trying to find bottoms in there. V reversals are just they're V reversals. They come out of nowhere. You're going to be wrong, and they can be failed rallies. So I'll take the things that are carving out nice big bases in the market. Insurance stocks as a whole, absolutely. Big moves. Again, my biggest concern there is what is their exposure to the private equity markets, private credit. You have to weed through them. I'm not a fundamental analyst, so I don't get I certainly look at them, but I don't dig that deep into them. So those would be my concerns if you're looking in that area. That's it for me. Back to you.
Excellent. Excellent. Thanks, Dave. Appreciate it. All right, folks. Well, we're going to call it a day here. Tomorrow, we will do a morning show and we will do an afternoon show for Kevin Warsh and the Fed decision. So we'll see you back here tomorrow morning. I think late reporting today. Hang on one second. After the market closes. I think we get SK Hynix this afternoon, and then tomorrow we'll have Microsoft and Meta, P&G, ARM, Qualcomm, Starbucks, Robinhood. So big day tomorrow. Since we've been on the air, futures have come back a bit. Nasdaq now down only 0.6%. Dow up close to a full percentage point. S&P close to flat. Um, Gold just at a little bit above $4,033. And we will watch the markets today. And certainly, I think everybody will be watching and listening to the FOMC tomorrow. We'll be here for it. Catch us in the morning at 8 a.m. And then we will broadcast tomorrow afternoon, I probably around 3 p.m. So we'll see you then. Take care. Have a great day in the markets, and we'll see you tomorrow morning. Thanks.